All right, everyone. This is part two where we cover uranium, oil, and other energy-related topics. So again, thanks for being on, Casper, and we'll dive right in. So we're going to start with uranium futures pricing. What's your opinions around the uranium futures pricing?
As we briefly discussed here before we went live, it's a bit of it's one of the more difficult charts to get a grasp of. But I just want to show you one thing here, just one basic thing here. Again, we have these 20 to 30% pullbacks along the way, and this time is no different in my view. You can see the pullbacks all the way up, and now we have pulled back again 22%. So everything looks good. I do think that we're in for a longer-ish pause here due to this short-term melt-up that we had here. So I do think we're in. I think we could basically use 6 months more to build a base and then go higher. But again, hey, it's uranium. It's one of the most, scarce metals that there is. So again, it could go higher just in a heartbeat if things get really so. But again, my prediction is half a year worth of basing, and then we leap higher way into the 100s. So yeah.
That's probably what I would think too, because if you look at like a uranium to oil ratio chart, they kind of just go back and forth against each other.
Oh, okay.
And
Okay.
I think they're just going to stair step up like this as they go up against each other with that ratio. That's my opinion, but
yeah, I haven't looked at that chart in a long time, by the way. So I want to just briefly, before we go on to the next one here, it's also one I think I posted down here. We had this is not on a log scale anymore. It's on a nominal value, but basically we almost met the target of this very wicked inverted head and shoulders. It's not textbook by far, but it is there and it is valid. And you can see here we almost hit our target on this move up here. So again, the pattern there definitely made sense. And that's also one thing I posted, that's where we're going. And we stopped at roughly 106, and the measured move was at 112. So very close to that move there. So just wanted to show you that one. But I think on a log scale, it's way different. It's way higher. But that's a different topic, I guess. But it's so.
Yeah. So what are you looking at in this space here for URA, URNM? What looks good? What are they doing? Are they squeezing or anything like that, in your opinion?
When I'm looking at the overall markets for uranium, I'm only looking at the URNM for the technicals because that's a 100% pure play, whereas URA is I think it's a 70 or 80%. So, but I will show you the URA chart, and I think we are at that moment in time the last big resistance before potentially we do the big stuff here. The reason is I have deleted a lot of stuff here because that's not what I wanted to show. But again, roughly this, if you align it perfectly there, roughly this 31.5, 32-ish, big resistance level coming across the board here. You can see it over there as well. So I think this is the last big one before we go higher. And the reason is that the first leg up was, back in 2021, stopped there at that high. So this will be my last big resistance. And when that happens, I think we could have a similar move, but in reverse, right? So we will have that big move when that happens there. So we have the perfect symmetry, more or less, from the bear market, the basing, and then going higher. So I think from a URA perspective, we are right there. So whenever we get above 32, 33, game on, I guess.
Game on, game over. Yeah. We just go up.
Yeah, I mean it's the uranium market is very small, so when it moves. So also I want to show you some great alignment here with that the March 2020, the peak, the pennant, the consolidation, and then again the alignment is just dead on this parallel channel here. Maybe I should make it blue so we can distinguish between the two. But you can see the alignment, and when I see alignment that is perfect, I'm like this has a lot higher chance of getting there. So so it's perfect. And also we're very close to that big Fukushima gap down there, so it makes sense right there. So again, 32, 33 URA, and we are back in business.
Do you think that URA could potentially outperform the physical metal right now? Do you think the physical metal could go sideways when URA could go up? Do you think that's a possibility?
Can you repeat? Excuse me?
Do you think URA, which is the mining, some of the mining companies could go up, even though we've got the physical pricing or futures pricing go sideways? Is that a possibility? Could we see a breakout of the miners in relationship to the underlying metal?
I have the perfect chart for you because I knew you were asking. So I have a chart here that I want to show you. And it is just I'm very bullish silver, but again, I'm not a Vikov, expert by any means, but there is a pattern, Vikov accumulation and distribution. And when you measure URA against the uranium spot price, this is what I see. So this is the pattern I copied from Google. But basically what you can see here, we have, again, you have to look into it yourself because this will take like 15 minutes to really dive into. But basically what we're seeing here is a bottoming pattern where people accumulate, in this case, miners in relation to the metal. But basically what we're seeing is, in my view, textbook stuff here. So you can see we have these three, tiny smaller lows here. You can see them there, there, and there. Basically, the spring is about to be sprung, I guess you can say, right there. And if that happens, you know the rest. This will be a massive move. And that's also why I think when URA breaks that 30, 32, 33, it will go on this, parabolic move on the right side. And that's when this ratio will heavily favor the miners. Big time, big time, big time, big time. And as you can see, if we zoom in here, this is on the weekly, we are almost there breaking out. We have this in the ratio, it's roughly at 0.35. When that breaks, it is my view and my conviction that the miners finally, after 3 years worth of underperforming, they have done well, but they've underperformed the metals. That's game on, big time.
So we're really at the bottom of the bottom where the spring is at, which is like the best time to basically enter a stock because it's done basing out.
Exactly. Yep. So yeah, this is not a typical, like inverted head and shoulders and all that. But again, this is a different way of looking at people accumulating things along the way. And yes, it can be used if you measure a stock against something else. It can easily be used in that way, not only measured against USD. So it's totally valid. And I think we could be potentially in for something big here, very big.
And I think we've got the same pattern also in, like, say something like GDX and some of the metal companies too. They look very similar, that Wyckoff accumulation bottom phase there.
Yeah,
they look very similar.
Yeah, there are two versions of the accumulation. This is one of them. The other one is a bit different, where you don't make that final spring. But again, I completely agree. Also, when you look at the ratio, I think it is GDX against gold. There is also something similar, not as perfect at this, but there's something. There's something to it there as well. So yeah, yeah.
So that's huge, guys. Because my opinion, for whatever it is, whenever I have made a lot of money, generally what I see are clean patterns with a lot of the charts. The companies that have something wrong, they've got really ugly looking patterns, or they don't have patterns at all, or they just go down because they're going bankrupt. But this is like the cleanest pattern, and we're at a very opportune location to be looking. So that's what I'll say there. It looks very clean.
Yeah.
Looking at, so is there anything else you'd like to talk about uranium with? Any other things that you've got with uranium?
I'm just in relation to the URA, looking at where we are at that ceiling at the moment. I think we're looking at roughly 10 miners right now. There's also sitting at the big resistance, the big one to get through, even though they have done insanely well from the bottom. The big one is right there for like 10 of the mid-sized companies. So again, the alignment, it seems to be the real deal. Again, we need to wait for a confirmation within the next few weeks. But again, I think that uranium here is again is going for that next bigger move. And also one thing before we switch from uranium, many people are bearish right now. I don't understand why, but they are on Twitter. It's just usually my posts, they get a lot of attention, you can say, but right now it's very mediocre. That's good. That's really good.
So moving from uranium to, let's say, oil. And again,
Oil.
I'm highly biased because I like oil quite a bit.
Yeah.
So what are you seeing there?
I'm just going to remove a lot of stuff here. I didn't clean this one up before we went on, but I just want to show you one trend line, basically. One trend line. And you know about this one as well.
Yep.
We can zoom out here just a bit here, just to give 1 minute of longer term analysis. So basically we peaked out in 2008, and then we had a big macro formation. And when I say at least that's my take on it. When you have a big macro formation, it could be in a stock, it could be in gold, whatever. That is when you have like a massive, in this case, it's almost a parallel, but usually you have a falling wedge, but where you have these big impulse, three lower lows. Obviously, 2020 being the big, everything went to hell basically. And then we have right now a massive surge breaking out, and basically now we're doing a bull flag here or retesting on top of that massive major trend line. So that is just very brief what has happened. There's a lot more to it, by the way, but that's a different video. But what we can see here last week, actually, oil broke out. But again, the way I would have liked to see this breakout happen is that we have been doing this grinding, we tagged it, and then we consolidated, and then we broke out. That would have been a lot more a lower risk, because you're having the tag and then you're basically breathing and then you go. We have come a long way right now. So I still need a bit more conviction to see if this is really the deal. But for now, we have broken out on oil on a 2 years long, trend line from the previous peak. So it means something, but I'm not quite there just yet. But again, it is again the alignment with the gold and silver that we talked about in the earlier video. Energy and precious metals, they are very much linked to each other. So this could be the real deal, and basically we are breaking out. But again, I need a bit more conviction here because we have come such a long way already. You can see on the daily we are pretty overbought, excuse me, roughly 75. It's not big, but again, if we had that tag and we did it both like here, we would have been at roughly 50, and that would have been textbook breakout that would have been a major buy compared to what we've seen here. So that is my take. Oops.
And with this move that we've potentially have in front of us, and yeah, we might consolidate for a little bit or something if we're overbought for whatever period, or maybe we don't.
Yeah.
Where do you think we end up going with oil, in your opinion?
Again, it will be like we talked about in the previous video. I think gold could go to 7.5K, 10K maybe. It's very difficult to say where we're going. I know we're going a little higher, but with that, I think we will have oil being a lot higher as well. So that's the downside, filling your gas, your car will be insanely expensive. Overall energy will be insanely expensive. So if this is the real deal, again, we have let's do the monthly here, by the way, and go to Heikin just to get a bit more like that very quickly. So we have a rising parallel channel going back 50 years and basically ping-ponging between the two. And again, I know it sounds insane, and we have been talking about this many times, but again, we are in a period where we haven't been investing into oil for the past 20 years, basically. And we're still using more and more and more oil. Even it doesn't matter what the politicians say, oil is I think probably the most important commodity that we have. It's oil. And basically we have, in my view, what could be a pole and a flag here, and the measured move is, something like 200, 250, basically. Potential overshoot, we can reach the upper trend line there. But again, that's not tomorrow, that's not this year, that is maybe, in 2029 or whatever it may be. But again, oil looks long-term really good. I'm still a bit cautious here short-term, because I think it could be a fake out. But again, let's see what happens. But long-term, the picture is the same. You don't get these big patterns here, only to breakout, retest, and then roll over. Obviously, it can happen, but again, I think the probabilities is definitely in the bullish camp. No questions to ask there. So,
And what do they like? What does an ETF look like for, an oil companies or something like that? What does it look like there? Like
yeah,
XOP or something or whatever you got pulled up.
exactly. XOP.
Yep.
This is also one of the oil and gas explorers, and yes, it's an ETF. Overall, basically, it hasn't done anything for the past 20 years. If you look at it from an average point of view, obviously it had, right? But we're still basically at the same level 20 years ago. But similar here again, we have that inverted head and shoulders. And though we have discussed this previously, and again, if this plays out, the measured move on this one is at a $1,000, by the way. I'm just saying. Again, it's not financial advice and all that, but again,
That's awesome.
these patterns, even though the target sounds crazy, they usually hit if they are, over 20. This is 10 years, by the way. So this is just it's incredible, really. The big level to get through roughly 170 to 75, completing, breaking out from the neckline, the blue neckline, and yeah, you're also seeing, big oil companies right now breaking out big time, together with, as you can see here, by the way, on XOP. This is just a long 1 year, what is it? 2 years almost sideways action breaking out. I think we will tag the neckline, potentially a deep pullback into the upper golden trend line there, and then we are ready to go. And I would actually prefer to have that instead of just a clean cut, because then we have had a long move for a long time, and then you can get some iffy stuff there. So I would prefer the test, retest, and then game on.
Do you ever look at XLE, which is another ETF of the
I
big
do.
boys?
I do.
I
I
mean,
do.
it's such a good looking chart. So
I don't have any lines on this template, but basically, just to do a very, very quick draw here, this is exactly when silver is breaking out. You're seeing XLE, the overall, oil and gas energy sector is breaking out. Coincidence? No, it's the real deal. I mean, this is just massive here. Massive move up, sideways action.
I go all the way across to the previous bull market high. Yep, right there, and it's like,
Yeah.
oof.
I think if you find it on a line chart, you basically, maybe not. You could potentially have a high there, but anyways, it's is it there? Excuse me.
Yeah, it's the other one's a
Basic,
false breakout that
yeah,
crashed. Yeah.
yeah. So this again, energy really strong here, really, really strong. But I do think again, if we have a lot of market turmoil, when if things get really, if the big indexes like the Nasdaq and the SP 500 starts to basically correct big time, depending on the speed, that will, as we talked about last video, that will pull down gold, silver, and oil. Even though we still consume the same, it doesn't matter. But again, people has to cover, and they will sell and short it big time. But I think it will be like a big drop, and then it will bounce back. So again, the correction that we might have here in the overall markets, depending on the speed, if it is like a slow, rollover, and then we go lower and lower, lower lows and lower highs, that's very good for gold. Very good for gold, because it will keep climbing because people are starting to hate tech. But if we have this, pullback and then a tiny bull trap, and then we collapse, that means that people have to liquidate everything that they have in order to, to pay their position. So it's depending on, the speed and the angles that we get. But overall energies, I have nothing at the moment. It looks incredibly strong here. You can also add a trend line from, let's call it the fake out there. So you can see we also breaking the all-time high golden trend line. It's good. Yeah, it's good. It really is good.
Okay, so here's the ultimate question then. Right now, in the position that we're in, you've got the spring in uranium, you've got the breakout of XLE to the upside, and the big gigantic inverted head and shoulders on XOP. Then you've got the breakout on silver, gold's already broken out. Which one? Like, what do we look at? What should we be looking at here? Everything kind of is breaking out, and it all looks good for the most part. But what's your opinion on that?
I'm a bigger uranium bull than you are. I have a lot more in uranium compared to you. So uranium, I'm extremely bullish on if we can get that last kind of, notch above those levels that we just discussed. Again, people will laugh because it's silver, but I have to go with silver. It's one of those, decade long, 2 times, 3 decade long breakout that you'll get maybe 2 times, 3 times in your lifetime. I have to go with silver, even though it sounds crazy, because silver is just it wears you down. It really does. And when you get the breakout, you can't believe it because it has been fooled you so many times. But it has to be silver. It really has to be.
Okay, so here's another add-on question then. If you owned gold companies or you owned oil companies or uranium, would you sell any of those to buy more in silver?
I own a broad basket of everyone that you have just said there. So again, no, I would not, but I'm adding, funds into gold and silver, but I'm not selling anything because again, if we are wrong on silver, let's say we're wrong and we have a huge collapse down to, let's say, I don't know, $15. Can you imagine what the miners will be at that point in time? They will be hammered, right? So again, nothing is 100%, even though I'm quite confident in this breakout. So again, I will not sell anything of my current, portfolio in uranium or oil, or whatever. But I'm definitely adding a lot more right now into the silver space and gold space, by the way. So I'm not adding into uranium. Maybe I am at some point in time here closely, but I'm not adding into gold or, excuse me, into oil or anything in that space. I have taken my positions. By the way, on the Substack 2 weeks ago, I'm fine, ready to go. So yeah.
Then you preferring the producers or the junior stuff, explorer, junior developers? What do you like here right now?
I
Producers or the smaller guys?
I like
Or
both. I
everything?
would like
Both?
I have the bigger names just to have a bit more stable because they don't move, like even though some have done that, they don't move like 20% a day. Even though First Majestic did like a 11% move, I think in this week that we just had, that's kind of big. But I have a mix, I have producers, I have explorers, I have juniors, so it's a broad basket basically. The only reason that I'm not into the ETFs is because we have an extra tax here in Denmark on ETFs. But also I would like to make my own ETF, you can say, on based on the charts only, what looks best. That's why I have, these companies that I do. So
Basically what I do.
yeah.
I do the same thing. Anything else that you'd like to add or share about anything or any other topics?
Not really, but I would maybe to end this part 2 here, I want to show you this is uranium and gold and silver, by the way.
Let's do it.
We are bullish on both of them, as you know. So this is basically want to show you here. Did I pick the correct one? Yes, I did. Okay, so let's start here with gold, by the way. So this is uranium spot price divided by gold. We've seen it before. We had that mega bottoming pattern in favor of uranium spot price, really. We broke out and I kept calling. I'm very confident that we're seeing a pullback down to the neckline. It should be blue, by the way, because that's what I make my necklines. And I think that's where we're going. But when we get there, you can imagine what happens to uranium spot price at that point in time. Again, we're talking August here, like we talked about. We need that basing in uranium, hopefully, while gold goes up. But when we get down to the neckline here, it is my thesis based on the pattern there that we are going to vastly outperform again uranium spot price in relation to gold. That's why I'm so bullish on uranium and gold, by the way. They are just looking incredible. Silver, same thing here. Basically, we're coming down to visit that neckline. Massive, but this is a 15-year long bottoming structure that we are seeing. Tiny right shoulder, breakout, retest, up we go. So again, it looks like in this cycle that actually uranium spot price could have more gains to it than the other two, and that sounds insane because silver looks incredible.
What about uranium to crude oil?
The spot price or for both?
Yeah, spot price versus spot price. UX1 versus CL1
Oh,
or
CL1, okay,
whatever.
yeah.
Yeah,
I haven't been
CL1.
looking at that for like like a decade really. Oh, okay, this is nice, I guess.
Yeah.
Yeah, so basically we're coming in, this is in favor of uranium. I mean, we're looking at uranium compared to oil. So big breakout, doing some retesting here. It's a big, we are below, but again, I'm still in the camp that we're very close to that. It's very extended here, by the way. So I do think that we are close to a potential bounce here. How big it will be, I don't know. But again, uranium spot price again looks to be able to outperform crude oil. Again, if it's a fake out, could be, then obviously oil will be the better play. But again, I do
What if
think
we swap those? What if it was crude oil divided by UX1? Let me see if we get a different looking
yeah, sometimes you
chart
do.
there.
That's a good point. Sometimes you do.
Yeah, just to see. Does it look any different? Like, would you be bullish on
Okay. Yeah.
either one?
Yeah, you can see here. So now it actually aligns a bit better. It's basically the same, but again, it's
You think it could be a false breakout?
yeah, potentially it could, because usually at the end of moves you have that massive, massive leg down here, where you basically see in this case in favor of uranium, you just go down, 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 down. And at some point you get the snapback. So yeah, potentially that could be a big false breakdown in this ratio. I completely agree. That could be the case. Because then you also have, you could do like that, right? So if this is a false breakdown, the sentence, from false breakdowns comes huge reversals, meaning if this is a massive false breakdown, the snapback will be insanely quick. It will be over, in like a year. So
Yeah.
So yeah.
Okay. Well, I don't have any other questions. If you have anything else you'd like to share, it's up to you.
No, as we talked about on silver, I know this is energy, but I think silver is with a high certainty doing something we don't see very often. So that's just my end sentence there. It's that yeah. Let's keep it at that. Let's say so.
Okay. Well, let's end it there then. Thanks for coming on the channel, Casper. If people want to follow you, how do they follow you? It's gonna be Twitter and
Yeah,
whatever
Twitter and
else.
YouTube and on Substack. I just started Substack, and all of them is uselink INV. Or go to Twitter. You can see that I have a link to both YouTube and the Substack. So check it out if you're interested in those.
Okay. Well, that's all we've got for today, guys. So thanks for viewing. Don't forget to click the thumb up. Say Casper rocks in the comment section, and we'll catch you guys later. See ya.
Bye.